What's up, everybody? I am here back again with our contest winner, Matt King. What's going on, Matt?
Hey, what's up, man? Glad to be back. Let's make some money today.
Yeah, so we are looking at our monitor tab, and just to get a kind of an idea of where we're at with everything, we're up money on everything except for that little thorn in our side, the Nasdaq. So you can see P&L year to date, which is also the total time we've been trading in this account. That one's down a little over $1,600. And so we've got two positions on there. We made a couple adjustments that we recorded in the last video, so you can go back to that one and check that out. We're getting a nice down move in the Nasdaq today, down about 0.75%. So that's helping us out, getting some money back for us. The Nasdaq owes us some money, so it's giving us back a little bit today. So that's good.
Yep.
We've
Looks like it's putting the whole account down a little bit. So we'll get that down movement. We'll make some money back.
Yeah, so we're down a couple $100, and we've got four different symbols on right now. Like I mentioned, we've got two positions in the Nasdaq. So go ahead and click on the Nasdaq on your current account screen there and go to your Analyze tab.
Yep,
So
that's the right one.
yeah, so here's one of the positions. You can see price is nice and almost centered in our range there. We just need some more time to pass, some more premium to come out of those options to benefit that piece. And then if you click off that one and click on the other one, and you can see that one's hanging out a little bit more to the upper range of our range, but again, need a little bit more down move, a little bit more time to pass, and we'll get some money back in that. Now, if the Nasdaq continues higher, then we'll need to make another adjustment and manage mechanically as necessary, but that's where we are on the NQ. Next position we've got is the bonds /ZB. We made an adjustment here. Prices come down in bonds a little bit today too, so that one's nice and centered. And we want a little bit more profit in that one before we book that one.
Okay.
And then EEM, that one's down over 0.75% today as well, so that's acting nicely for us. We've got some profit there. And then go ahead and click on XRT real quick. XRT is the retail ETF, so it's retail stocks, and even though the market overall is down today, XRT is strong. So one of the few sectors that's up today, it's up over almost 2%, and so that's getting us back in the profit in XRT. So the one thing I wanted to do today, Matt, is if we look in the upper left-hand corner at our total account values, a little over 49,700. We've got available funds of a little over 25,000. We don't like to go over 50% of our account value in capital usage, and the reason is we've talked about this before. Options use leverage. We're utilizing vehicles that operate under high leverage, so we don't want to get overextended. If we had a huge move in the overall markets, we don't want to get stuck in a position where we can't make any additional moves, where we can't put on any other positions. And the fact is, especially with this contest for you, because we're trying to make you some money during this thing, is we want to use our capital in the most efficient way possible.
I agree. Yes.
So yeah, you want to make some money, right?
Yeah.
So we've got XRT and EEM. These are ETFs. The other two are futures. And in the ETFs, we're using about $8,000 worth of buying power for each of those. And so and you can see that's reflected in the bottom right-hand corner, Matt. If you go under where it says BP effect, that's your buying power effect. So you can see we're using almost $8,000 on XRT, and it's about the same on EEM. We've got about 10 contracts on for each of those trades. And so what I'd like to do is, and I don't do this a lot, but for a situation where I get in a position where there's other things that I want to trade, and I'm up against that wall of kind of that 50% usage of capital, and I want to put some more trades on. This is something that I'll do from time to time, not very often, but what we can do is we're in the profit a little bit in EEM and XRT. And so what I'd like to do is I'd like to just take off 5 contracts of EEM, book that little profit that we have, and then also take off 5 contracts of XRT, book the profit, book a little bit of profit that we have in XRT. And what that's going to do is, like I said, it's going to free up some capital, and so then we're going to have some money to put on some additional positions. And in fact, the one position I want to look at, and we can go to this in a minute, but the implied volatility, as we'll look at in a minute, in UNG or in natural gas is fairly high right now, and so I want to get a position on in nat gas. The other reason for doing this that I think is a prudent thing to do and a very calculated thing to do is, remember, we've got positions on in the NASDAQ, which are stocks. We got a position on in EEM, which is emerging market stocks, and we've got a position on in XRT, which is retail stocks. So all 3 of those are stocks, and so what I'd like to do is I'd like to trim down our exposure in the equities, in the stocks, and I'd like to reposition some of that buying power, some of that exposure into an uncorrelated asset that doesn't have exposure to stocks or bonds, and nat gas fits that perfectly for us.
Okay.
Does that all make sense?
Yeah, that makes perfect sense. Just freeing up some additional funds there, making a little bit of money, and freeing up some funds so we can put it in what could be a pretty good winner there.
Absolutely. So we're on XRT right now. So why don't you do this? Go to your position there down below the graph, click on that, and then shift and click on the next leg below it. And then you're going to right click and close position, create closing order.
There it is. This one?
Yep, click on
top
that.
one there.
And so that's going to bring up our order bar, and it's going to show that, if we wanted to close the entire thing out, we've got 10 contracts, but what you can do is you can just adjust that down to 5. And then we're not going to get filled at 78 cents. Let's kick that up to 80 cents. We'll probably get filled at around 80. And hit confirm and send. And send.
Bam, done.
Got filled at 80. So now you can see, boom, that automatically kicks that down to 5 contracts. And so you can see our buying power is now down to a little under 4,000. So that's perfect. That's what we were looking to do.
Yep.
And then if you go up to the upper left-hand corner, now you can see we have over 28,600 in available funds for trading. So that freed up some capital there.
Nice. Okay.
Now keep in mind, had we just left that on, and we could go in. I mean, we had before we did that, we had around 25,000 of buying power, so we could have put on trades. But I really want to emphasize and I talk about this in my courses. I talk about this in almost every video, and that is keeping your position size small, keeping your buying power in check relative to your account value. And what I mean by that is just make it a practice. It's a best practice to keep that buying power under 50%. Always keep at least 50% in cash, because that's really going to help you in the long term. You can fight your way out of any big moves or disasters that happen when you do that. If you start extending yourself and using 60, 70, 80, 90% of your capital, those are the only times that I've ever gotten in trouble trading with the methodologies that we teach.
Okay.
So I want you to make money. We've got a small window of just 3 months to do that here. So I want to do that, and like I said, use a little bit more efficient use of capital to get on another uncorrelated position. So same thing in EEM. So let's go ahead and book 5 of those contracts there, same way.
Okay. Closing order, and here.
And we're at 48 cents. Yeah, kick that down to 5. Let's kick that up to 49. See if we can get filled at 49.
Okay, trading up about right in the middle there.
Right.
And confirm and send, bam. Done.
There we go. So we cut those in half. You can see the buying power effect over there in the bottom right is a little over 4,000. And now in the upper left, you can see our total available funds for trading is over 32,000. So that's good. That's what we wanted.
Awesome.
All
So now
right,
you
so
got
let's go to Nat Gas and see what's going on there. So if you click on that and go to the chart.
charts. Pull up the UNG chart here.
Yeah, UNG is good because remember, with natural gas, the implied volatility indicator is just it's not accurate if you use it on the nat gas futures. However, the corresponding ETF is UNG, and so that's the one you want to look at to get a accurate reading on where implied volatility is on those options.
And that's pretty much the same with all the futures, just for clarification. I mean, if I go to any of these futures, it's probably safe to not trust the IV.
It's different for everyone. Like that one you're clicked on, the /6E, that's the euro, and that's actually accurate on that one. And so
it figures I would do that.
Yeah, well, it just has to do with each of them have a little bit of nuance, and that's one of the things that I go over in the course that we just released about trading options on futures. I break down every symbol that we trade and all the little nuances for each of those. You know, like
Nice.
the grains, so the ones you're clicking on there, soybeans, wheat, corn. You just can't use the IV indicator on those, and they don't have an underlying ETF to track it with. So that's one that I like to trade those in periods of when everything else has low implied volatility, because you always get a pretty good bang for the buck with trading those. But that's something that I have to kind of manually track. And just from experience in trading them, I kind of understand what type of credit I should be getting, where those at the money options are typically priced, and just kind of track those and see if it looks like a good time to trade it or not. So I know that's not a very good answer, and I've tried to come up with a solution to those grains, but unfortunately, the way that those options are priced, we just Eric Vogel's calling you.
He is.
Anyway, so that's just the deal there, and each of those symbols has a little bit different nuance about it. So anyway, that's the deal there.
Well, alrighty then. I just have to watch through your new futures course and learn all that stuff one piece at a time.
Right. So yeah, go to natgas /NG. So on UNG you can see the IV was at 69, the IV percentile, which is well above that 50 level, which is what we're ideally looking for. We know that those options are priced higher than they have been over the last 12 months. And so that's when we want to sell, is when those options are priced higher. So yeah, go ahead and click on /NG and go to your trade tab.
Okay, that's on the right one.
And then I'll go ahead and I'm going to give you a few minutes, and why don't you kind of walk through the process here of the different things that we need to do.
Yeah, we're looking at I'm looking at the 47 days, just right around the range, because we're putting on a new position. So 47's right in that range, perfect fit, and we're probably going with the financial here.
You got it.
So just gonna kind of roll through here. Generally looking for something around that 20% or 20 delta mark.
Yeah, anywhere from the kind of the 16 to 20 delta range. Just remember the higher the delta, that just means the closer you are to price. So it's kind of more of a narrow range when we put up our graph. The smaller the delta, that'll give you a wider range for price to move around in. But so the wider the range is, what you give up is your potential for profit. So you have a little bit lower potential profit. If you get closer to the money or a higher delta, that range is a little bit tighter, but you get more potential for profit.
Okay. So, really, I don't see. It's like splitting hairs basically at this point. depending on which one we were to go with, but just to pick one that's in that range, I'd probably just pick a 21, unless you have any other, unless there's something I'm just not noticing here.
Nope, sounds good.
Okay, and that one's at 385, but that's going to pop up when I do oops, accidentally clicked on the wrong one. We are selling Strangle, right? Yeah, sorry, Strangle. And then just coming through here, 385.
So we got
leave this one right there for now.
Yeah, so we got our call set at 3.85. So now we got to scroll up on the put side and figure out which one we want on the put side.
Yeah, and you like staying around the same area. So I mean, if we pick 21, that one's going to be around 295.
Yeah, and what you actually did is you accidentally clicked on that.
I messed something up, didn't it?
So it populated below. But go ahead and right click on that 295 again.
This one here.
Yeah, right click on that and just sell Strangle again.
Strangle.
Okay, so now we have our 295 put set. Now we got to go back down to the call side. And what was that? I think it was 3.85, right? Yeah. So
385.
Yeah, so don't click on it, but then you just reference it's 3.85, so you can change it there.
385. So I got 385 and 295 on the put side.
There we go.
It's good to know those little quirks. All right. And then you just wanted to do one.
Yeah, let's just do
one contract on that one.
Yep.
Okay.
Yeah, the futures are bigger contracts than the ETFs typically. So let's just do one for now.
Okay. And price, normally we kind of go in for something in the middle, like 126. I don't know if you want to try and knock it down and look for something like that.
Yeah, 0.126 is probably where we get filled. So let's go ahead and just right click and analyze that before we shoot it in.
Yep. Where are we at? Analyze. We've been busy doing all those adjustments, and I'm forgetting all the stuff, all the basic stuff, putting one on in the first place.
I know, it's been a while since we actually just put one on, right?
Yeah. Let's look at this. Remember, you set your slices to break even by date, and then see if I can pull this together.
Yeah, and since that right side was off the screen, go ahead and set your slices again, and it should set up correctly.
There it is.
There we go. So you can see we've got a nice almost 70% probability of making money on this if it goes all the way to expiration. However, we're going to be booking a profit way before expiration or rolling, so we will our probability is going to be quite a bit higher than that, more in the 90% range.
I like that.
So what you can see here is now we've got a max profit on this. If you hover over the graph there, of 1,260. So this is another kind of a piece of why I wanted to put this on, is because with the EEM and XRT, I think our max profit on those were like 600 and some, 800 and some. So in booking profits of 40 or 50% of that, we were looking to make just a few $100s on each of those. Well, with this one, just with one contract, our max profit's $1,260. So we're going to be looking to book a profit of $500 to $600. So more profit potential, and we're using less buying power. And that's one of the things that I really like about futures, is that you're using a lot more leverage, and so you're able to put on positions for less buying power.
I like it. All right.
So let's go ahead and ship this order. Go ahead and right click down on the bottom and confirm and send. And
looks like it filled right away.
Got filled right away, so we are in it. So now we've got a nat gas, we've got a NASDAQ, we've got a bond, we've got the EEM, which is emerging market stocks, We've got XRT, which is retail stock. So I like that diversification we've got a lot better. We took some chips off the table in two of our ETFs, so lessened our exposure to stocks, added another uncorrelated asset in nat gas, and so I like where we're at here.
Sounds good to me. It was an easy day. I understand what's going on and why we're doing what we're doing, and I'm glad we could diversify that like that.
Very good. Well,
Yep.
Matt, we can sign off from here. Have a great day, and we'll talk to you next time.
Sounds good, man. Thanks.